It's time for the full year results for XP Power. An awful lot going on in the world, and to tell me what that means to XP is Duncan Penny, the CEO, Chief Executive, and Gavin Griggs, the Chief Financial Officer. First of all, give us a rundown. There's quite a political scene around the world. Tariffs, Brexit, Trump. What's it meant to XP?
Well, we've had all those uncertainties, but again, we've produced a pretty good year, I think, given that backdrop. The numbers were very strong throughout the year. A bit of the softening in Q4 due to the semiconductor manufacturing equipment sector, but the other three sectors that we deal with, healthcare, industrial and technology, held up really, really well. So I think all in all, we're pretty pleased.
Gavin, I can see you nodding there. Tell us about the numbers.
Yeah, orders record level, just over 198 million. That's 8% ahead of where we were in 2017. Currency was a bit of a headwind, so actually on a constant currency basis, 12% ahead. We also benefited from the acquisitions, so our core organic business was up a healthy 5% orders. And then revenue, just at 195 million. That again, strongly up 17%. That flowed down to earnings per share, up 18%. And because of the strength of that and the confidence we had in the business, the board has proposed a final dividend of 33 pence, taking the full year to 85 pence, which is 9% up on the prior year. So a good financial performance across the board.
Duncan, Gavin mentioned acquisitions there, and the really newsworthy one because of the timescales involved is Glassman out in New Jersey in the US. Just remind us what they brought to you and what they've been giving you during the period of these results.
So Glassman's a really interesting company. It does high power, high voltage, so it gives us another big stream of products that we can sell to our existing customers to grow our addressable market. If we sort of plot this out, basically, traditionally we've been in the low power, low voltage market. The acquisitions we've done recently have been moving us up the power level and up the voltage level, and Glassman really fills out that product portfolio. So we're one of very few companies now that you can come to, and we can give you the complete gamut from high voltage to high voltage, from low power to high power. So it's a very exciting acquisition for us, and the early signs are very good. We're already finding good opportunities for this product in areas where they haven't been active before.
Let's spin the globe a little bit and look at the various XP geographies. Gavin, I've got to mention the B word, the Brexit word here in Europe, but I'm sure you're going to counter me by saying you're very much hinged to the dollar. What's happening at the moment?
Yeah, we are. You're right. We're very much a dollar-based business. 80% of our revenues are dollar-based, and 100% of our cost of goods are dollar-based. So Brexit for us, yes, we're being mindful of the impact, but reality, we import products from Asia into Europe, so we'll just divert some into Germany rather than the UK. So hopefully avoid any of those border issues that may occur.
Let's go back whilst I'm on you to the US. Obviously have Mr. Trump out there at the moment, but also the whole question of tariffs. Where do we stand on the US as far as XP is concerned?
Well, our product is affected by the so-called Section 301 tariffs that they've imposed in the USA. This is, for people who are not aware of it, product produced in China. The US have imposed a 10% tariff on electronic products, basically including power supplies. We're in a fortunate position actually because we also have a factory in Vietnam, and we're just actually building a new factory in Vietnam which is just completed. So where relevant, we've been diverting product from China to Vietnam to actually hopefully put us in a competitively better position than some of our competitors who are actually only have the ability to manufacture in China. And Gavin, tariffs, are you having to hedge there? Are you having to change the way you do things?
No, not at all. Because of being a dollar-based business, our production costs are in dollars. We sell majority of it in dollars as well, so no impact on our financial structures.
You touched on Vietnam there, and you touched on the fact that you're building a new factory out there. Of course, you've got interests also in China. How is it going in Asia?
On the manufacturing front, pretty well actually. As you've said, we've completed the building of the second Vietnam facility on our existing site, as we always planned to do. There's not going to be a big upstep in cost there because we've already got the management and admin infrastructure there. It's the new factory's on the same site. We need the capacity, and we'll bring that on stream sometime during Q2 this year. And as we've previously said, we are moving product from China to Vietnam.
So Duncan, give us a bit of an insight on the different sectors that you're dealing with.
Sure, I mean, Semifab is very much at the forefront of what people think about us. It's about 25% of our business at the moment, and that's the bit that's been soft in the fourth quarter of last year. But I think people tend to forget how diverse our business is. Industrial's 43% of our business, and if you look in that sector, it's vast and highly diversified. You've got things from industrial printing, 3D printing, smart grid, factory automation, displays and signage. Healthcare, again, has grown quite nicely for us in 2018, and we're looking for a good growth in that sector again in 2019. And again, it's difficult to think of a piece of medical equipment that won't have an XP power supply in it, whether it's a diagnostic equipment, patient monitoring, laboratory equipment, hospital beds, endoscopy, surgical equipment, robotic surgery, it's everywhere. So that's a very good sector for us. And then technology as well, which for us is things like high-end computing, broadcast, which has also been very, very strong for us in 2018.
Okay, I'm going to ask you to look ahead to 2019, both of you, in a moment. But before that, Gavin, we were talking about supply chain and component shortages when we did our interim results. Where are we on that?
Yeah, as we said at the time, we've increased our inventories of components to protect ourselves from any impact of those. The inventory levels remained high during the second half of 2018, simply because the lead times didn't come in. Lead times are still up to 48 to 52 weeks on some of our components, so we're having to hold a higher level of inventory. In the grand scheme of it, it's cost us a couple of £100,000 in interest charges, but we haven't missed any delivery to any customers.
So finally from you, Gavin, look ahead time within all the rules and regulations, obviously, for the rest of 2019.
Look, like any other business, we're not immune to what happens in the global economy, but we've entered 2019 in a good position. We've got a order backlog of just over 80 million sterling, and we're seeing continued momentum in all of our sectors and all of our regions. So we're optimistic for 2019 and expect to see further revenue growth.
Duncan, what can you tell us about the year ahead? Any more acquisitions on the horizon at all?
There's nothing that we're imminently looking at. The acquisition, of course, we've got the benefit of Glassman for the full year of 2019, which is going to help show more growth next year. But again, the design wins have been very positive again in 2018, so that sort of bodes well for the medium-term future of the company. So we're still feeling really good about the business.
Okay, Duncan, Gavin, thank you very much for joining us to talk about XP's full year results here in 2019. Thank you very much.
Thanks.